Very good morning. Welcome to Chartbusters. Well, the markets have been moving around this morning. We were down close to 100 points on the Nifty, but as we speak, at 10:30 a.m., we're up 110 points odd. The mid-cap index, though, is doing a relative underperformance. The one that's really driving us higher is the Nifty Bank. That's up 0.7%, and that's been the driving force this morning. Hey, Mangala, morning.
Good morning, Nigel. You know, along with Nifty Bank, we have Nifty IT as well. The IT pack, after seeing a big drubbing all of last week and all of this year after underperforming, has also come back a tad. We have the index up. So we have two engines supporting the frontline index. But like you pointed out, you know, the mid-cap index is not doing too well. And that may be a bit of a worry as we move along in the second half of trade, especially as we also move towards the 20-day moving average, which we broke on Friday itself. Let's take a look at all the top stories that we're tracking this morning for you. In its latest review, the government has cut windfall gains tax on crude from 13,300 odd rupees to 10,500 rupees a ton. Duties on ATF and diesel exports too have been cut, as a result of which ONGC benefits.
The Street Cheers promoter fundraise in Ambuja Cements. Ultratech Cement feels the heat as Gautam Adani aims to be the biggest cement player by 2030. Novoco and India Cements, they gain on hopes of consolidation in the space.
Prime Minister launches the National Logistics Policy, which aims to bring all such services under a unified portal. Logistics stocks trade with a positive bias.
Mahindra Group sells 30% stake in its renewable energy arm for around 2,350 crore rupees as it looks to build a strong renewable energy business. Brokerage house CLSA says the company is going through a golden period and sets a target price of 1,567 rupees a share.
McLeod Russell hits another 20% upper circuit after corporate entity Carbon Resources picks up a 5% stake via big block deal on Friday. The volumes high today as well.
Well, let's get a technical expert then on how do you trade the markets from here. Manas Jaiswal joins us to tell us exactly that. Hi, Manas. Morning. We saw a horrific Friday trading session, actually, with the Nifty ending closer to the lower point of the day. This morning, you thought we were pulling back a little bit, but the dip has got bought into. How do you trade the index from around the 17,650 odd mark? Do you look to buy a dip? If yes, at what level? Or do you believe that, in fact, we're likely to move back towards the lows we saw earlier today?
Good morning, Nigel. I feel that this bounce back is just a reaction because we have seen almost, 600 points crack in last three trading sessions. So this is a reaction, and Nifty is still trading below 20-day moving average, and that is why I'm still cautious. I feel that on higher levels you may see some selling pressure. So I think one should remain cautious and one should create short position if Nifty starts trading below 17,550, because if it breaks 550, then you may see further downside, and Nifty can test 50-day moving average, which is placed near 17,350. So I think one should remain cautious on this bounce back. Even in Bank Nifty, I think Bank Nifty has strong resistance in the range of 41,200 to 41,200 to 41,400. So I think here also, I think one should remain cautious on high levels.
All right, take that point. You're maintaining your cautious view until the 20-day moving average is taken out. Individual stocks, what are your thoughts out there, Manas?
So I have one buy and one sell. So first one is the buy call on Escorts, because Escorts has taken support near to 20-day moving average, and we have seen a breakout today above 2030. So take a long position in Escorts. Keep your stop loss below 2,000. Target would be around 2150. And a sell call on Tata Steel, because I see weakness in most of the metal counters. Tata Steel has broken its 100-day and 50-day moving average today. So I think here you may see more weakness, and here the target would be around 102. So take a short call here. Stop loss should be around 106.50.
That point, Manas. Thank you so much for joining in and giving us your views. Let's now talk about a segment where we get you a few ideas for profit coming in from our colleagues at Money Control Pro. Nitin Sharma joins in with a stock.
IGL reported above expectation result in the first quarter. The performance was driven by strong CNG demand and better realizations. Decline in domestic PNG volume came in as a surprise. Overall revenue grew 33% sequentially, as company has been passing on the rising input costs. Weak demand from the commercial and industrial segment continued in this quarter as well, with 4% sequential fall in the volumes. Policy support for the higher allocation of domestic gas helped with the margin. APM gas allocation stood at 91% of the IGL's priority sector gas volume in first quarter. This led to a 20% jump in EBITDA to 8.6 rupees per SCM. Management is confident to retain this level of unit economics this year. APM gas price hike in October is expected to take gas around $9 per MMBTU and likely to be passed on to consumers through multiple hikes. Price differential between CNG and other automotive fuels is still more than 20%, which should help sustain CNG demand despite price hikes. At current market price, stock has further upside and looks attractive among the CGD companies. Near-term trigger for the stock is expected change in domestic gas price formula.
Thanks a lot for that, Nitin. Well, on that note, we'll slip into a short break. You come back, we'll get chatting with our first management, the management of Ramkrishna Forgings, on the back of their fundraising plans. We'll find out what have they raised this money for.
Welcome back. As promised, let's get chatting with the management of Ramkrishna Forgings on the back of a fundraise plan that the company has announced to understand the road ahead for the business and, more importantly, what they're going to use the proceeds from the fundraise. We have Lalit Khaitan, who's the ED and CFO of the company, joining us. Thanks a lot, Lalit. Always a pleasure speaking with you. 94 crore is the fundraise that you have. It is basically warrants which are issued to the promoters. Can you tell us what exactly is the current debt on the books? Are these funds going to be used to repay debt? You had a plan of repaying debt by almost 100 crores in the second half, right?
Yes, correct. And thank you for inviting me on your show. Certainly, this 94 crore majority of this will be used for the repayment of debt. But currently, in this financial year, we will get around 23 crore. And rest will come in next financial year because it is a warrant and entire money will come in 18-month period.
Yeah. All right. But you had earlier told us that you were assessed looking at a debt reduction. I think FY23 debt reduction, you were guiding for a couple of 100 crores that it will come down by. But now you'll be getting only 23 crores. So do you stick to that guidance that you're likely to reduce debt by close to around 200 crores odd in FY23? By the end of this year, what will your debt look like?
Yeah, we stick to the guidance of reduction of debt by around 200 crore by FY23.
And as of now, as of today, what does the debt on your books stand at?
I think it will be in the range of 1250 to 1300 crore.
Right.
We have reduced some debt from the March 22 level already. And by end of March 23, there certainly be in the range of 200 crore.
All right, take that point. Also, let's talk about business as a whole, because nearly 2/3 of your revenue comes in from exports, be it a third of your revenue comes in from exports, be it the US as well as Europe. Europe, there are talks of slowdown. US as well, because you're part of the economically sensitive CV plays. There is also a talk of recessionary fears, etc. FedEx issued that profit guidance as well, profit loss guidance. If you could give us a sense of how business is for you, and in light of that, what does this year look like?
See, certainly there is a lot of discussion on the Fed rate hike and due to the resultant recession in the market on the North America or US. Similarly, due to the war, we have a fear of business going down in Europe, and the energy cost the energy cost has led into a lot of shutdown in unit in Europe, and which all are concerned to us. But for the RKFL, I think we are in a much comfortable space, and we on the ground we are getting very good traction, and we are getting a very good robust orders from our OEMs, both as well as in Europe and North America. Though certainly order inflow is less in North America if you look at the Class 8, but overall backlog is quite impressive. And what happened with RKFL, we have been able to gain a wallet share with each of our customers and able to increase our content per vehicle with our customers. That's why we are able to improve upon our sales, and we will be having a better exports than the last year what we did, and overall sales will be much better.
All right, you said you're increasing your wallet share, Lalit. If you could tell us, what was it? What is it currently? If you can put a couple of numbers to that. And given the bit of a slowdown that we're seeing globally, the domestic market is coming up to speed as well. What kind of a tonnage number are you looking at by the end of this year? Should it be in that vicinity of, say, around 150, 155,000, or will it be more than that?
Yeah, what you said exactly near to that 155,000 tons around, because we are predicting a 15 to 20% growth, rather more than 20% growth for the full year from the last year what we did, and what last year we did around 130,000 tons. So it looks like 155,000 plus.
Right, and you said
and on the wallet share, on the wallet share, I would able to say, yeah, we are constantly increasing. I cannot put a number on the wallet share, but what at RKFL we have we are constantly trying to improve our wallet share with each customer, and trying to reduce concentration with the customer also. That over the last 5 years we have successfully able to do. Though we have gone down in terms of overall percentage of the company sales to the customer, but we have been increased in the absolute amount the sales with that customer.
And
so that's our constant endeavor.
Is the content per vehicle right now?
See, we are more than 66% right now.
Okay. And, you forayed into the EV space as well. It was about 6-7% of your revenues. How much do you think this can be going forward in the next, say, 2 to 3 years?
See, that's again evolving, I will say, because it depends upon the growth of the EV market. We are there, and a lot of our OEMs are having the EV models, and we are producing the EV products for them. And the target for the current year is, I think, 3 to 4% for the total sales of the company.
That EV segment FY24.
And FY24, yes. The FY24, we are looking at 6 to 7%.
And for this year, 3 to 4%.
Yes.
The other mix that you're looking at is the auto and the non-auto component. I think non-auto was around 20-21%. You're looking to take that to around 30%. And out of that, I believe railways is a big potential. So how much will railways contribute as a percentage of your total revenues, say for this year and for the next year as well?
This year, FY22, it was around 2%. For FY23, we look at more than 4% from the railway itself. And overall target is to reach to around 8 to 10% from the railway in by FY25.
Okay. And you also won this order for, supplying of metal bars. Has that anything to do with the railways, or is this an entirely different customer? You said it's a business potential of almost 80 crores per year. By when does this happen, and who does this go to?
This will be to our European OEM.
Okay.
And this will start from the next year, next financial year.
And 80 crore potential is by when? Next financial year itself?
Yeah, no. Next financial year, I think we have said it's 30 crore to start with.
Okay.
And it has potential to go to 80 crore. So it will take a year or two to go to 80 crore.
Okay, all right. What about on the margin parameter, Lalit? Input costs are cooling off. Operating leverage will play out because your volumes are going up. What is the rough margin band we should be working with for RK Forgings?
Yeah, see, a lot of things here on the margins. See, the power cost is going up, and few input costs are going up. Certainly, commodity prices is cooling off. And certainly, there is a benefit on the logistics side. The freight costs are easing up. So, certainly, that is balancing, and it will have a little positive impact. And we will try to improve upon the margins what we have in the earlier period.
23% is what you did. 22, 23%. So should we hold on to that?
Yes. Yes, certainly. Certainly, that's the minimum basic. We will be hold on to that, and we will try to improve upon it.
Okay. And what about the business that you're looking at in terms of client additions? How many client additions can you do this year?
See, it's a process and it's going on. I cannot put a number again here. But see, if you look at, we added around 900 crore plus order last year.
Yes.
And this year already the number is 300 crore plus. And there is a lot in the pipeline. And with the time, we will let you know what orders we are winning. And it's a quite healthy progress, I will say, pipeline. And the orders, what we win are the new orders and new product. That's not the conventional, whatever we are doing. So that we will be appropriately announcing to the streets and the stock exchanges whenever we have anything on that.
Right. And what about the ACIL acquisition? What's the status out there? I mean, I understand that, is likely to boost your top line by what? 500 crores over the next 2 to 3 year period. What's, the status there?
Yeah, this is still currently pending in Supreme Court, and we hope a hearing should happen, because we are not able to get hearings for quite some time due to preoccupations on one or other account. And if it happens in 1 or 2 months, next 1 or 2 months, then it should be through within this financial year. We hope that.
And finally, have you asked some of your vendors to reduce their prices, steel prices? Because the last time you joined us, you said that these are 6-month contracts. When does this contract period end, the cycle, and when is it likely to be revised?
No, in our case, the steel prices is the major appeal. Here, we don't have to play any role. It's the role between the OEMs and the steel mills only. And if that agreed between that, we have to just execute at that level, and pricing, product pricing accordingly being decided.
All right. Take that point, Mr. Khaitan. Thank you so much for joining in and giving us the outlook on your business. Looking to repay debt by almost 200 crores this year, over and above, the kind of debt that they've repaid already in the first quarter so far. Importantly, despite the slowdown in the US and Europe, they aren't seeing a slowdown in their operations. The stock recovers from lows, but in the last few months has been a big mover already. We take a short break, come back, get you more on the markets and individual stocks.
Well, the Nifty is holding well in the green. So let's focus on a couple of stocks. Mahindra & Mahindra, one of the top gainers on the Nifty after it sold 30% stake in its renewable energy arm. Brokerage house CLSA has also given a bullish call on the stock. Sonia joins us to fill us in with more on that. Sonia.
Well, you know, way back in 2020, Mahindra & Mahindra had come out with a strategy where they were looking to sell or rather monetize a lot of their subsidiaries, eventually list them to unlock value for shareholders. That plan continues, and as you rightly pointed out, M&M has sold 30% stake in their renewable energy arm for a little over 2,300 crores. Now, what they will do is set up an InvIT to list the renewable energy assets, and that will help unlock value for shareholders. The Mahindra Group will deploy these funds into the business and the InvITs over the next 7 years. They currently have an operational capacity of 1.54 gigawatts, and they're looking to build a strong renewable energy business. And this has been taken very well by shareholders. CLSA, in fact, put out a note, not on the stake sale of the renewable energy business, but overall on the business, where they say they maintain a buy. They have a target price of 1567, which is well above the current market price. The title of that note is M&M is going through a golden period because of the terrific response that M&M has seen to the slew of new SUVs. They also expect a full positive impact on the margins Q3 onwards, because raw material prices have fallen quite a bit, and very strong bookings of over 240,000 units on their SUVs currently. Not just that, they have a slew of new SUVs coming on board, whether it's the new XUV 300, the Bolero Refresh, the 5-door Thar, and over the next 12 months, it's going to be, advantage M&M in that sense, since they're looking to win the market share game. Hence, these two reasons are, perhaps the reason why M&M is up 2.5% in trade today.
All right, Sonia, take that point. That's about M&M up 2.5%. But the other stock which is doing well today is ONGC as well, up about 1% or so. And this is as the government in its fortnightly review has cut the windfall gains tax. In fact, on crude, it has been reduced from 13,300 rupees per ton to about 10,500 rupees per ton. For ATF as well, the export duty has been revised to 5 rupees per litre as against 9 rupees per litre. And we have diesel export duty, which has been revised to about 10 rupees per litre versus 13.5 rupees per litre itself. But the bigger trigger for ONGC perhaps would be something that our colleague Timsy said, that, they've gone ahead and requested the government to use the dividend route rather than imposing a windfall gains tax on ONGC and the oil companies itself, because the tax affects profit and committed capital expenditure for future projects. So that is something that, if is taken into consideration by the government, as sources have told Timsy, we will see a bigger benefit come by on ONGC, because remember, the stock had seen a massive fall ever since the windfall gains tax itself was announced. The other factor that is supporting the stock is that crude hasn't fallen much. It's still holding around that $92 per barrel mark. The other stock in on our radar is Cipla. It's after its Goa plant has received 6 observations following a US regulator inspection. Ekta joins in with more on Cipla. Ekta.
Thanks for that. Well, the news on Cipla today is that we managed to access the Form 483, which is basically the 6 observations which were issued to Cipla's Goa facility. Now, just to give you a background, it was inspected from the 16th to the 26th of August. At that point in time, it was issued 6 observations by the US FDA. Remember, this particular plant already has been under the US FDA scanner because they have a warning letter which was issued to them in Feb 2020. Now, in terms of the details of these 6 observations, that's basically the new piece of news for Cipla today. Is it has indicated, the Form 483 has indicated around 3 repeat observations. Remember, those 3 repeat observations are from the past inspections, and the concern is that it is going to definitely be more difficult for them to solve, considering that they have a warning letter on this particular facility. The repeat observation means that the US FDA is not satisfied with the remediation from the last inspection, and those problems still sustain and have sustained into this inspection as well. Now, in terms of the impact, it is definitely negative. One of the major disclosed products that could get impacted is a cancer drug, Abraxane, from this particular plant. It was expected to be launched in late FY23. Estimates have built in $20 to $30 million from this particular drug, contributing to around 2 to 4% of core EPS in FY24. Nomura wrote on Cipla today, they have a buy target price 1195. As a base case, they believe they do not expect the inspection outcome to have a material impact on earnings.
Thanks a lot for that, Ekta. Well, on that note, though, we've run out of time on this edition of Chartbusters. You stay with us. Trading Hour comes up next.